Abneesh Roy, who understands consumer space very closely and tracks it from Nuvama Institutional, is here with us. Abneesh, I think your days are becoming busier because after a few months of sideways move, consumer is back in focus, whether it's the QSR part of consumer, be it staples. Are you looking at value? Are you getting more queries to buy more into from your institutional clients?
Yes, we are seeing interest coming back in parts of the consumption. Currently, because there is a World Cup cricket which is starting from tomorrow, which will lead to more consumption for QSR. Of course, we have also seen the media for parts of consumption like PVR, Z, also very high interest. Avenue Supermart has come out with a quarterly update, which is clearly better than expectation, and that's why the stock is up 3-4% today. So Supermart clearly saw the store addition also picking up, and we also saw that the revenue growth on 19% is also decent. So we are positive on Avenue Supermart from longer term perspective. In the retail space, we like Titan, Trent, and QSR space because of the World Cup and festivals. There will be a benefit, and also because now Hindi movies are also doing well, the footfalls in the malls have clearly improved, and that is a captive audience even for the QSR, for the stores which are there in the malls. So yes, we are positive on Sapphire Foods in that space. Jubilant Foods is also decent. Yesterday we have seen that price cut has come in pizza. I'm not seeing that as a negative. Yes, competitive intensity has gone up in pizza space in the past few years. There is La Pino's and there are many other local chains. Even Yum has amped up. There are the cloud kitchens which are there. But I would say that overall, Domino's is a very strong brand. And definitely, because of the World Cup, there is a big opportunity which is being created. And it is important that you reach out to customer with good promotion schemes. So if you see what has Domino's done is clearly cut prices at the much bigger pizza, which is the top end. And there, if you see, the consumption will be much higher because cricket is seen as a family group viewing. So I would not see this as a negative just because of competitive intensity. Competitive intensity was there 1 year back also, 6 months back also. So why the price cut happening now? And this is not across the board. So this is going to create new forms of consumption. In the staples, we like Nestle, we like Tata Consumer. There we are seeing good growth continuing, good margin improvement also for Tata Consumer, for example, and tea crop, for example, which is a key raw material for Tata Consumer. That seems benign. In the first 1.5 months, there is 7-8% correction in the tea crop. So we are positive on Tata Consumer, Nestle. We are also positive on Godrej Consumer, Colgate, and Dabur. So those will be the topics in staples. In retail, as I said, Sapphire Foods, Trend, Titan are looking good, and Jubilant also decent. And in the media space, we like PVR in the broader form of consumption.
So that's a synopsis of the entire sector in terms of how the updates have been, what your view is on QSR and which are the stocks you like. But Abneesh, just drilling down further on this QSR space, do you think what's the need basically of coming up with these discounts? Is it just to get the volumes which they're not able to get right now? What will be the impact on margins of this? Or this could be a big kicker in terms of the earnings for Q3. What's your own evaluation of the need of bringing in all of these discounts and the impact on the profitability?
So three things. In terms of the QSR consumption, still we are not fully back to the pre-COVID level. So there is an intent to get back to that form of consumption. Second, of course, is the slowdown in QSR started last year in the December quarter. So we will see that in Q3, the base becomes a bit more favorable as we go ahead. Q2 will be weak. Q2, because of the slowdown which is still continuing, because of the Adhik Maas or because of lack of any big festival related spends, the Q2 will be weak. So we are expecting recovery in Q3, and then Q4 also, because of the softer base, hopefully the recovery should continue. Coming back to your question on why now, see, as I said, promotions and price offs in consumption is very common. You have a big opportunity of Cricket World Cup being there. Yes, there is a competition which has come. We have highlighted in our Coffee with CEO note on Sapphire Foods also that in Gujarat, for example, a lot of the local restaurants are also offering pizza. So competitive intensity has gone up as I said, La Pinos and even Pizza Hut and a lot of the cloud kitchens are doing well. So I will say it's a mix of new opportunity from World Cup, and you need to keep engaging customer with promotion so that he sticks to the brand. But more importantly, you have to engage with the whole family audience. So these large pizzas are consumed by the families. So this is a new segment they are targeting in a more aggressive manner, and to engage with the youth also. So I would say it's a mix of all this. I don't think this really impacts margins in any significant manner, because this is more of targeted promotions, and in one segment of the pizza. They have not cut prices across the board. If they cut prices by 30-40% across the board, then the whole profitability matrix goes for a toss. No company does like that. So I would say that yes, it's a good step, and it will not have a very big impact on profitability. Ultimately, any company will see profit on an absolute basis in a slowdown rather than the margins. In a slowdown, also, if you focus on margins, then that will be the wrong strategy. There is a slowdown in both urban and rural consumption. So it is very important that companies focus on the right promotions to look at a larger profit pool, larger market share, rather than just the EBITDA margin and gross margin.
Because the headline, pretty much grabbing the eyeball, saying it's a 50% cut in the prices. But I think we did get that confirmation from the companies that it's only on select days when probably the India matches are on, etc. Otherwise, there would have been a big knock to the profitability. Thanks, Abneesh, for joining us. So yes, there is a bit of competition intensity going higher in the QSR space, and the recovery is something that we're expecting from Q3, Q4 onwards. But Q2 is going to be a bit of a soft number.